The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're going to hear about a couple of strong buy, growth, and income stocks now with the editor of Zacks Income Investor, Ryan McQueeney. And one of them is Caterpillar.
Yes, the Dow component. Been kind of an up and down year for Caterpillar, actually mostly down, but I want to start with the positives and kind of make a case for it.
Okay.
So it's Zacks ranked #1 strong buy right now, and I think I'm just kind of waiting to see the stock respond to the positive earnings estimate revision trends that we've seen. So we want to take a look at that real quick. We can see strong agreement here among revising analysts. For the full year, 10 positive revisions. That extends into the next year. Also 10 positive revisions within the last 30 days. No negative revisions in that time. That's a really, really great trend. We're expecting earnings growth of nearly 68% for the current fiscal year. That's expected to continue expanding to the tune of another 11.5% in the next fiscal year. That's good. That's encouraging stuff. And if we look at the revenue growth, it's also there too. So to me, that says not only is the core business improving, but the earnings growth initiatives are paying off. So I like both of those things, certainly. Okay. Now, one thing that, as I mentioned, we'd like to see the stock respond a little bit better to that positive trend. And if we take a look, this is the one-year chart. It was a different story in the second half of 2017 than we've seen really throughout the duration of 2018. Stock really just hasn't been able to get anything going since the early February sell-off that we saw. It's been really, I think, battered down by these trade war talks. So hopefully renewed talks in that department will improve things. But one certainly that I'm optimistic about, because I like that it's a strong buy, and I like that it's seeing these positive estimate revisions. And then with that, we can transition to the next one.
To the next one, Sony Corp. Their consensus, Zacks consensus, was up recently, right?
Yeah. So another one that's Zacks ranked #1 strong buy, seeing positive estimate revisions. This is a Japanese company, so we have less analysts tracking it, but 2 positive estimate revisions within the last 30 days, no negative revisions. That's obviously a pretty solid trend as well. Now, bit of a stretch here on the income part of it, because the dividend yield is less than 1%, but a dividend nonetheless.
Yeah.
And it's on my mind this week because we've got Gamescom 2018 happening out in Germany. It's a massive, massive video game trade show in Cologne. Sony obviously makes the PlayStation, so they're a fixture at basically any video game trade show. Didn't have an official press conference there. Wasn't one of these show-stopping events, but they're out there showing off their new Marvel Spider-Man, a PS4 exclusive, debuting a bunch of other PS4 exclusives and announcing release dates and whatnot. I try to keep my eyes on video game news, so Sony's on my mind this week, certainly. And the fact that it's a Zacks ranked #1 strong buy with any sort of dividend, definitely always on my radar. And then if we want to take a look at the one-year chart for Sony, much better picture there. Been a solid year for this legacy tech pick, certainly aided by continued growth and continued interest in things like gaming. But this is a very diverse tech company, so gaming is just one part of it.
So they recently put a bid out for EMI Music Publishing, right? Had a little trouble with that?
Yeah, I don't know what the latest on the regulatory side of things was, but
is that, you think, any kind of a drag on the company?
I don't know if it's a drag. Certainly, the music industry is in a state of flux.
Yeah.
In a state of transition. I as a music fan, am optimistic about where the industry can go from here.
Okay.
So I think there's potential there. EMI is obviously one of the more traditional, talking about Sony being a legacy pick, that's more of a legacy music publisher. And we've seen these companies have to kind of redefine themselves over the past few years with the advent of streaming. But when you're that big and you're that powerful and you have the rights to that much music, you have the ability to redefine yourself. So Maybe some volatility there as those publishers continue to figure things out, but I'm optimistic about where music can go from here.
All right. Well, I'm sure you'll be keeping an eye on all of that. In the meantime, do you own either of these?
We have Caterpillar in the income investor. We do not have Sony in the income investor portfolio, and I own neither personally.
All right. And don't forget, always more stock information on our website, Zacks.com. Also on our website, on the podcast page, is Ryan's Tech Talk Tuesdays podcast, and he produces that weekly. And don't forget that he has a live streaming video program called Free Lunch, and that's available on all major platforms for you to see. It streams live Monday through Thursdays. He does a pretty good job with that and has some interesting conversation and some interesting guests on that show as well. So now when somebody says to you, there's no free lunch, you can actually say, you're wrong and be right. With Ryan, I'm Terry Ruffalo.